here. Today's Wednesday, April 17th, 2024. We want to continue our discussion today about ETFs, but we're going to shift gears and talk about silver. But before we do that, let's talk about what happened this week in the metals. We have gold, silver, and palladium all higher. Gold another 2% higher for the week, and it looks like it's still rising. The only outlier was platinum for the week, and on the 1 year time we have gold leading the way, up 17% since a year ago today, and silver following up behind. Both platinum and palladium are minus for the 1 year mark, but that's probably going to be turning around here, and gold and silver continue to march northward. Now let's talk about what is a silver ETF. If you watched our last video about what is a gold ETF, the whole ETF concept is the same for silver as it is for gold. That is, it's a paper derivative market that's loosely tied to the price, spot price of silver. And there are a few, very few of these type of investments that have a direct connection to physical metal, but even those, it's very difficult for the average investor to turn a holding in one of those exchange traded funds or notes into physical silver. Unless you're a very large player, that's not even an option for you. So let's talk about some of the other concerns and dangers of the silver ETFs compared to physical silver that you can purchase and hold and store in a professional vault or some vaulting location of your choice. What the difference, one of the main differences is the silver ETFs are more dangerous, I believe, than the gold ETFs because silver is more volatile than gold. And anytime there's volatility in the price of an asset, a lot of times those paper derivatives of said asset can blow up more quickly or more severely. And so we saw that with oil a few years ago when oil got to minus $38 a barrel, where the barrel was worth more than the oil in the paper markets. Of course, we know that wasn't the real price of oil, and that's the point. There may be a day when the silver ETF implodes, even though the price of silver is still very solid. Another thing is when you have physical silver, you get the benefit of the shortages, whereas you don't get that extra pricing action when you own the ETF, because the ETFs are tied to spot price. And whenever demand is high and supply is low, as you know, if you've been involved in the precious metals market for any period of time, you can see premiums really rise when supply is tight and demand is high. And it's only the holders of physical metal that see that extra price action on their behalf. And so to be able to take advantage of those extra premiums, when that happens, a lot of times you can sell your silver back at a price that exceeds the spot price. Can't do that if you own a silver ETF. It's only going to be loosely connected to the spot price, if that. So for that reason, to get the full benefit, full protection, and full price gains that happen in silver, the best way to do that is to be the owner of physical silver, not the paper derivative silver known as an ETF. So thanks for tuning in. If you can at all do it, I think everyone needs to have a physical allocation to silver. We'll talk to you again soon. Have a great rest of your week.